In this discussion, we will discuss the discussion question of discuss the process of making a make or buy type of decision. So when considering an essay question or discussion question such as this, our goal typically is to expand on the discussion or essay question, more likely than being able to pick up the points or the relevant topics to pick up points for an essay question and or expand on the topic, which is generally the goal of a discussion question. Keeping that in mind, let's go through this one more time. Discuss the process for making a make or buy type of decision. So a make or buy type of decision is going to be one type of term or one short phrase we can use for a common managerial accounting type decision. That might be where we want to start off then, is saying, hey, this is a make or buy type decision. This is a managerial type decision, typically something that we don't think of as much in the financial accounting side. Once we make the decision, of course, we will then record the transaction in terms of financial accounting. But to make the decision, then that's going to be managerial accounting, decisions that don't have basically a systematic setup or process, as most of the processes do for financial accounting, decisions that are going to be made for internal use of the company. So then we can go into the specifics of a make or buy type of decision. Typically, when we have a make or buy type of decision, we have something that we could have the choice of either making internally or we can purchase it, whether it be something that's going to be included in the inventory or some other thing that we're going to need within internal use. It could be a component part to the inventory that we're making. Either we make it or we can purchase it from an outside vendor. So that's going to be a typical type of managerial type of decision. Should we make it or should we buy it? Now, it seems fairly straightforward. The question really is, well, is it cheaper typically for us to make it or is it cheaper for us to buy it? And most of these type of questions, when they format in a book problem, will basically have a problem which will say, hey, here's what the cost is per unit. Here's the total cost per unit we think to make it. Here's the offer to buy it. The buy price will typically be lower than the make price. And then we're going to say, well, we should buy it. But the real question there is always going to be, with a lot of these managerial accounting decisions, is whether or not there's variable costs in the cost of production that we came up to make the product. Because if there's overhead, things that we assigned to the cost of production that are not going to be eliminated if we were to not make the product, then we need to take that in consideration. We're really only thinking about those variable costs, the costs that will go away, basically the relevant costs, if we were to purchase the equipment and not make it. And that's usually going to be the key factor. Most problems, if we then figure that out, we'll say, oh, well, if we just take into account the relevant costs, the cost that would go away if we were to buy, then oftentimes we get to the decision that we should actually continue to make the item. So that's going to be the key component. So what we want to do is, of course, look at the relevant benefits. We want to look at the relevant costs, the incremental benefits, the incremental costs to the decision-making process, and then decide which process would be the best. Usually the thing that's going to be the determining factor, or the thing that we need to think about that seems a bit unusual, the confusing piece, the key to the puzzle, is going to be the fact that we are allocating to total costs when we produce some things that are not going to go away, like overhead, and therefore we need to remove those if we're really going to give a comparison about the actual true cost of us creating this internally versus externally.